Right. Okay, let's move on. Let me welcome on board Nitin Rakesh, CEO and MD at Mphasis, and also have with us Manish Dugar, the CFO. Manish, if I could, or rather Nitin, if I could start off with you, your constant currency growth rate is slow to 2%, lowest in about 4 to 5 quarters, and direct business growth rate has also slowed down considerably. So given this kind of a start, would you be able to maintain your 25 to 30% growth rate that you did deliver in FY22?
We've definitely seen growth in the right core market, right? North America applications outsourcing, especially led by digital transformation and modernization deals. And of course, very strong growth in offshore headcount, which is kind of aligned to the right quality of growth. Two, our TCV numbers are still fairly strong. 302 million TCV sold in quarter. We announced, we signed another $60 million deal in the current month of the next quarter. So, if you look at that, it's a fairly robust performance on TCV. And more importantly, the pipeline is still up sequentially, despite, record conversions in the last 12 months. So I think we are sitting on some really interesting deals. The deal flow is still fairly robust, right? So that's number two. Number three, I think the environment is still demand-led, supply constrained. Not a surprise that we've seen significant, pressure from many of our peers on their profitability and because of cost of labor and so on. I think we are still very comfortable when it comes to having the operating leverage because we are still running at a slightly low utilization number. So we have the leverage we need to continue to grow without actually having to add significant net new headcount. And all of that operating leverage will help us as we go forward in the next couple of quarters. And finally, I think as some of the macro environment plays out, we are still seeing good growth in our segments, but there are some other segments that are slowing down, and that definitely has an impact on the supply side. And we think that will give us some more operating leverage when it comes to actually taking that supply, availability and fulfilling higher growth. So we're able to actually pick up the growth as we go through the rest of the year. So I think on an overall basis, we are still fairly confident and comfortable in our direct business growth. We are very pleased with the quality of growth and the deal flow, the pipeline, and the fact that we are consolidating our position with many of our top clients. In fact, we added one more client in the 150 million plus category this quarter. We now have 3 customers over 150 million, and the average revenue from our top 5 customers is 150 million. So I think that's a very, very unique metric for our industry, for a company our size in the industry.
Right. Manish, this is the second quarter of weak BFSI performance, which forms about 60% of your total revenue pie. So are you expecting a pickup from here, or do you think it's going to continue to be a bit soft in the coming quarters too?
So BFSI as a segment actually has been the growth driver for us. Insurance on a YOY basis has grown more than 22%. I guess what you are looking at is impacted by, on one side, DXC, which is also contributed to the insurance business, and partially it is, I would say, projects which were ramping up and which have come to closure. As we look at the pipeline and the TCV win currently, and also the fulfillment that is going on, we believe that insurance is a blip. It should not be seen as a trend. So both BFSI and specifically insurance as well, I think should be growth drivers for us. Nothing different from there.
Manish and Nitin will request you to hold on to that thought. We'll come back